What a doozy we've had as we entered this past week wishfully thinking that inflation wouldn't inch any higher before actually being relieved with the news of our latest inflationary reading. But more on all of that to come shortly. Investors, I have quite a video for you today, all packed with the need-to-know economic insights for you to invest more wisely, followed by 7 dividend stocks that haven't quite been hit with the momentum bug, meaning, yes, there are still discounted dividend stock opportunities out there for all of you. With that, let's dive right in. So as we always do, we're going to go ahead and get kickstarted here with our macros first. And what's been very clear throughout this past week has been the overwhelming sense of market optimism. That was sparked on Tuesday after the latest data set on inflation was reported, with inflation having notched down from 3.6% to 3.2%. Now, we did in fact expect inflation to come down to 3.3%, so to get an even better than expected report actually sent us on a bit of a run. And in additional momentum building news, October's producer price index, which is a measure of the cost of producing consumer goods that directly affects retail pricing, tumbled much lower than any of us could have possibly expected, which all made for a week worth of investors simply feasting on all of the positive market news. However, the question now becomes whether the Federal Reserve will actually hike interest rates and continue on with their hiking cycle. I think it's important now more than ever to look back about a handful of months ago and realize at one point inflation was ticking down before it shot right back up almost out of left field, leaving the Federal Reserve in a position now to really attack inflation. I'll tell you this, it ain't going to be over until Powell sings.
As temporary, and the labor market is again strong.
Too much inflation.
Now, we as investors should keep the next FOMC meeting date on our radar and on our calendars, because the dates here, December 12th and the 13th, will ultimately mean about a week before that the Federal Reserve officials will go off the grid in their blackout period, and I just don't want any investors out there to be fooled by the masses of retail investors who are going to be jumping the gun on what the Federal Reserve officials will do. Again, it ain't going to be over until Jerome Powell sings that 2% inflation song. However, we now as the long-term investors of the market have an opportunity on our hands, especially with dividend stock opportunities that are still discounted if we're invested for the longer term, which leads me to the very first dividend stock on our list today, Lancaster Colony, ticker symbol LANC. Now, it's engaged in the manufacturing of specialty foods like frozen breads, dressings, to dips, pastas, and all the alike. And what I like about an investment in Lancaster is the fact that it's actually an afterthought for all of us, rather a company that we don't normally speak of, but it's incredibly lucrative. And right now, Lancaster is fortunately for us down by over 14% in the year, trading for $170 per share, whereas it was once over $200 per share at the onset of the year. But thinking bigger picture here, or longer term rather, we can see Lancaster has shot up over 155% over the last decade, with top analysts feeling quite optimistic about this specialty foods manufacturer, with a forecasted share price coming back up to $209 per share, making for over 22% worth of upside. Now, of course, as dividend investors, let's have a look at some of these dividend insights here, because I'm really enjoying what Lancaster has to offer. Lancaster is coming in with over 60 years worth of straight dividend growth at a 7.21% growth rate, along with a 2.12% dividend yield as we speak. Next up, I don't know about you, but I can't even talk about food without quenching my thirst, which leads me to American States Water, ticker symbol AWR, the one and only government contracted water company that's squarely focused on the production, distribution, and sale of water, our essential need of survival. That should gift you with a ton of confidence in American States Water to enjoy the discounted stock when it falters to just $80 per share, which is roughly 13.6% down year to date, with a PE ratio coming in at 24.5. It's not exactly low, but for such a reliable company, an extra penny or two is worth it, especially as it just continues to grow over time. Of course, we can see here that it skyrocketed by over 244% over the last decade. However, here's where this dividend stock actually becomes quite mouthwatering, if I may say, with insiders at the director level scoring more shares as recent as November 13th. And I do believe with time, American States Water is just another gem for any dividend portfolio, given it has almost 70 years worth of dividend growth at a 9.32% growth rate throughout the last 5 years alone, with a current dividend yield coming in at 2.13%. Now, investors, you just got 2 out of the 7 dividend stocks on today's list, but now I want to ask for your help in simply letting me know if this video video is delivering any value to you as an investor, that's all you have to do is tap on that thumbs up button, because every thumbs up helps me understand that this is the type of content that you're actually looking for. With that, let's go ahead and discuss Illinois Toolworks, ticker symbol ITW, which is in the business of manufacturing industrial tools in multiple verticals, whether it's food equipment or construction products like welding or polymers, which then, as you can imagine, probably put this company through the ringer throughout the last couple of years, given our macro environment. And while it's not in the red per se as of this year, it is down from a peak of around $263 per share, trading for $237 per share with a lower PE ratio at 22.9. And now, if you're thinking it's not worth it because it's not as cheap as you'd like it to be, I gotta say quality is always worth it when it comes to a company that's delivered over 277% worth of growth within the past decade. Not to mention, your investment into Illinois Toolworks would then allow you to receive its dividend, currently sitting at 2.36% worth of a yield that has been growing steadily by 9.8% over the past 5 years, with 27 years worth of history. But if Illinois Toolworks didn't quite sell you, perhaps this next one will. You see, as you probably know, the last 2 years have been stretching a lot of businesses and consumers very thin. That all prompted every organization to evaluate cost-cutting measures. However, one company that truly got pinched during this cost-cutting period has been United Parcel, ticker symbol UPS, which, as you can see, slid by 12.7% year-to-date at a share price of just $147 per share with a PE ratio here at 14.5. But now, just hold on a second here. Once our economy flips back around, we are talking about UPS here, the leader in logistics, so it should really get back on track to soaring to new heights, just as it has over the past decade, soaring by over 98%. And analysts are there with a similar outlook, forecasting UPS's share price to rise to $169.63 per share. That's over 15% worth of upside, as well as with smart money actually making their moves last quarter. But we're here for the discounted dividend stock opportunity, and because of its dividend here coming in at 4.4% worth of a yield with a 12.23% growth rate that's been growing for the past 14 years, UPS might be well worth it for you. Next up, a semiconductor manufacturer here that has recently been in the red zone. Investors, have a look here now at Texas Instruments, ticker symbol TXN, which is currently trading for just $151 per share with a PE ratio below 20 at 19.4, all likely due to supply and demand shifts of last quarter. But think well into the long term here, because tech is going to be a huge part of our future, and a play like Texas Instruments will likely continue to deliver, as it's appreciated over 371% over the last decade, with analysts also foreseeing more upside to come, about 8.5% worth of it climbing back up to $164.81 per share, along with hedge funds that have already claimed more shares worth of Texas Instruments. But it's the dividends here with Texas Instruments that really get me going, because we have a company that has shelled out dividends for over 18 years at a 13.8% growth rate with a current yield sitting at 3.42%. Now, many of you have probably heard me boasting about McDonald's lately in the last few videos, and now this go round I have another fast food gem for you to consider that is actually presenting a very interesting opportunity. It's Wendy's, ticker symbol WEN. Of course, it's not the size or of the popularity or even the real estate strength of the Golden Arches, but definitely an investment to at least be aware of and have on your radar. It's down by over 10% in the year, trading for $19 per share at a PE ratio of 20.2, with analysts who have been very bullish on the stock predicting over 18% worth of upside, coming up to a share price of $22.47 per share, while hedge funds seem to be loading up on Wendy's as well. After all, this fast food queen surged by over 180% over the last decade alone and will likely continue to grow into the future. But we have dividend growth here on our hands of 21.91% and a 5.26% dividend yield. And while we're on the subject of higher growth rates, we might as well now discuss Newmont Mining, ticker symbol NEM. It's a mining company which actually has the world's largest gold reserve under its operation as well. Now that should grant investors with, well, the confidence to invest into a gold find like Newmont Mining. I mean, as we speak right now, this gold find is down by over 24% on the year, trading for $36 per share after it fell from $55 per share at the onset of the year. That's all macroeconomic related reasoning. But over the course of time, we can see a beautiful growth here, over 64% worth of appreciation this past decade, with analysts who are only forecasting even more growth to come Newmont's way, with over 26% worth of upside. Now it's going to bring their share price to $45.90 per share in due time. And while Newmont's industry doesn't exactly allow for steady growth in terms of the dividend, we are talking about a 28.73% growth rate and a dividend coming in at 4.4%. So talk about a hidden gem in the market or a literal golden dividend nugget. There you have it with Newmont Mining. Investors, you now have all 7 dividend stocks to go ahead and review. Of course, I want your thoughts on all of them. Drop a comment down below. If you found today's video to be of value, you're going to love this one right here. But before you go ahead and click away, be sure you're subscribed to never miss another dividend stock idea.